Okay, Jay Betcher, the Rehab Man here. Welcome to Splitting the G. Splitting the G is brought to you by Garage Band Brewery, located in the heart of downtown Plainfield. Stop by for their impressive assortment of great tasting brewskis, brewed on site in their state of the art brewery. Enjoy live music in the tap room or outside in the beer garden. Great beer, live rock and roll music. Count me in. If you enjoyed this video, please leave a like and share it with a friend. Okay, let's go. All right. Nice pour. All right, time for the MBS Week in Review. Remember, when rates go down, bond prices go up. If you own a 7% 10-year Treasury bond and the rates go to 6%, that 7% bond is still yielding 7% for whoever owns it, making it worth more than buying a 6% bond when the rate's 6%. So here we go. And remember, please remember, I don't write these headlines, so don't shoot the messenger. Monday's headline: solid gains despite MBS underperformance. Data was all about the ISM manufacturing report, which came in weaker than expected. ISM is the Institute for Supply Management. It's basically a nonprofit company that produces government economic reports. Rates were steady. Aside from the manufacturing report, we have three more big ticket data days this week driving the market. Tuesday's headline: more gains after jolts, but they might have happened anyway. JOLTS stands for job openings and labor turnover statistics. Job openings and job quits were both lower than the previous report. Lower should mean that it's better for mortgage rates. However, the 10-year Treasury was hitting the lower trigger, and Tuesday's rates moved up a little bit. Wednesday's headline: counterintuitive reaction to data, but we're not upset. The ISM service report, that's the non-manufacturing jobs, came out today above the median forecast. That should have resulted in a weakness in the 10-year, which was the initial reaction. The 10-year lost some momentum earlier, but it made a comeback, and I'm being told that's based on Friday's upcoming jobs report. Wednesday's rates remain neutral. Thursday's headlines: bonds continued taking their seats ahead of the big show. The big show, of course, is tomorrow's jobs report. It's kind of like the crops report in the movie Trading Places with Eddie Murphy and Dan Aykroyd. If you saw that movie, if not, you're probably not getting that joke. But anyway, everyone and everything's holding steady. Bonds and rates were flat in anticipation of that jobs report. Friday headlines: jobs report much stronger than expected. Non-farm payroll jobs, 272,000 versus 180,000 that were forecast. That's huge. It's 100,000 more. Unemployment was at 4%, with the forecast at 3.9. So the 10-year yield is up nearly 15 bips. The MBS is down a half. If you're going to lock today. Today is the day to lock with the MBS down a half. So next week's big ticket items are the CPI, Consumer Price Index report. That's on Tuesday, and the Fed's economic projections, which comes out on Wednesday. So stand by next week to see what happens there. All right, so let's split the G here. Here you go. Here's to your weekend and mine. Mine's getting started a little early here. It looks as though I have a drinking problem. But anyway, I don't have a split in the G problem because I split the G, baby. All right. So have a great weekend. We were going to have a guest here earlier in the week, It was a contractor friend of mine that has done a bunch of 203Ks that I've financed, as well as some Fannie Mae home styles. Great kid. I wanted to really kind of pick his brain about some of the things that a contractor does. He's going to be around next week, so if you want to check us out next week, it'll be a really interesting, fun podcast. So have a great one. Adios, hasta luego. Enjoy your weekend. Goodbye. If you like this video and would like to see more, go to my YouTube channel at youtube.com/@splittingag. And if you want to shoot me an email, I'm at splittingag@gmail.com.